Hey guys, and welcome back. Today, I'm going to become even more unpopular because people do not like it when I go bearish. People think that I am just this massive permabull, and I'm really not. I am willing to tell you when Bitcoin is going to go through a major correction. I'm a permabull when it comes to the long term because Bitcoin's been in a 15-year uptrend, but the next 48 hours might not be so hot for Bitcoin. That's right. Today, I'm going to be sharing with you why a backtest of $12,000 is now highly likely and why a drop below $12,000 is extremely possible. If you are in a long trade right now, I highly encourage you to take profits if you have not already, and I'm going to show you why a drop below $112,000 could be right around the corner. So, without much further ado, let's get started. Bitcoin has gone through a major rally over the last 48 hours. We saw an initial drop down to about $111,992 before rallying up to $115,800. This is where the trouble began. You see, Bitcoin had a great deal of resistance right here at this level, which is $115,000, as that is the same level. If we just turn this this trend line a different color, you'll be able to see that this is the exact same level that Bitcoin bottomed out at back here after we originally ran to $123,000. $115,800, therefore, was a very critical level for Bitcoin to break through, and we categorically failed to do that yesterday. This is why yesterday I made a video entitled "Long Traders Be Warned," or something like that, whatever it was. It was something to the effect of, if you're in a long right now, be very careful. And the reason for that is because we were most likely going to go back towards the zone around 112. Well, today we have seen that play out, and I'm going to share with you why a drop down to 112 or lower is highly possible. Many people are comparing $112,000 to the $100,000 rock-solid level of support that we had during the last corrective movement. And that is not necessarily an apples-to-apples comparison because 112 is not the mass psychological barrier that 100 is. It is simply the previous high on Bitcoin, the previous all-time high set on the 22nd of May. Bitcoin, as we talked about in yesterday's video, has had a much shallower bounce than crash. You can see just very simply from looking at the candlesticks that Bitcoin crashed much harder than it bounced. This was one of our early warning signs that Bitcoin was not actually going through a major recovery, and instead, Bitcoin was going to drop back down into the direction of 112. Today, I'm going to share with you why there is a high possibility that $112,000 will be broken. Okay, so whenever we are going into a trend, what we're looking for are levels of support and resistance that give us an idea of what's happening. So let's say we have a flat level right here. Let's call this $10,000 on whatever market. If you are looking at a bullish trend, typically what's going to happen is you're going to see the market rally up to that level, correct, break through that level, backtest that level, and break out higher. This is a classic bullish trend that focuses on a specific price level. That's what we would be seeing right now if we held 112. We rallied up to 112, crashed, broke through it, back tested it, and we'd rally higher from here. That is what we would hope would happen since Bitcoin is exceptionally bullish. That being said, there is more at play than simple technical analysis. Instead, there are also market makers. You have the likes of Larry Fink, you have the likes of Saylor, you have the likes of Coinbase, and many of the other massive exchanges that have a vested interest in one thing. And they have a vested interest in making sure that we don't have a blow off top. Many people expect Bitcoin to just moonshot straight to $250,000. In fact, I've seen a bunch of people on Twitter saying, I bet my reputation that Bitcoin's going to $250,000 this year. While that may happen, that neglects the fact that many of the largest players in Bitcoin now have a vested interest in that not happening. Think about this. The BlackRock IBIT ETF is now the second best performing ETF in the history of the United States stock market. Other than VOO, V-O-O, it has had the most inflows in billions of dollars in the last 90 days of any other ETF in the United States economy, the entire United States stock market and securities market. It is the second highest earning ETF in history. It makes more money for BlackRock than their S&P 500 ETFs do. BlackRock, within the span of 2 years, went from making most of their money from the stock market to making a major plurality of their revenue from the cryptocurrency markets. And if we go into a bear market where Bitcoin drops 70%, BlackRock loses 90% of that revenue as retail becomes less interested in Bitcoin, because who wants to buy, if you're retail and you have no idea what's going on, which retail wants to buy Bitcoin at $80,000 when the all-time high is $250,000? The idea is that Bitcoin's dead. What BlackRock wants to see is 20 to 40% corrections, because that's something that they can sell to their investors and say, this is a great buy. Go ahead, dump up your money in. Let's make a lot of fees. We are exiting the era that was pre-institutional, where exchanges had a major incentive to see a bear market happen. Number one, so they can accumulate more, but number two, so that they can liquidate your shorts, your long trades, and then you can also get burned on shorts, because shorting Bitcoin is a much more dangerous endeavor than longing it. Exchanges for many years have had a vested interest in bear markets happening. They realize they're going to have 18 months to 24 months of low revenue, but they're able to make a lot of money in trading fees on the way down, especially with the liquidations. On the other hand, in the post-institutional era, which began here with BlackRock, you now have the largest players in crypto are no longer the Coinbases and the Binances of the world. No, instead, now it's BlackRock and Fidelity and Saylor. Those three entities have a vested interest in Bitcoin having a slow, steady, continual 20 to 40% a year march higher into oblivion for the rest of the lives of the people that are running those companies, Larry Fink, Saylor, etc. These companies have a vested interest in preventing a bear market. And to prevent a bear market, there's one way to do it. The way that you prevent a bear market is you prevent the blow off top, because it is the blow off top that causes the bear market. Jeb, are you saying the 4-year halving cycle is dead? No, I'm not. That would be a foolish thing to say, because we just simply don't have that data yet. If it was 2027 and we were supposed to have a bear market and we didn't, sure, we could say with confidence that the 4-year halving cycle has been disconfirmed or unconfirmed or broken, whatever you want to call it. We don't have that data right now. But what I will say is that these major players have a vested interest in slowing down the growth rate of Bitcoin, which means that these players have a vested interest in this. This is the liquidation heat map on CoinGlass, and it shows you where the traders have their liquidation prices. You can see a large number of traders have a large amount of liquidations right below 112. This is coming from people who are, understandably, trying to make a great trade, longing at exactly 112 to try and catch the bottom and bounce, because they have confidence in $112,000 the floor. In fact, someone in our Discord server yesterday, they went into a 50x long trade at $120,100, and they made 125%. Yesterday in the first cohort Discord server, I encouraged them to close the trade at 115% profit before Bitcoin drops back down to 112. They were reluctant, but they ended up flash closing the entire trade and made $8,000 in 2 days. Unfortunately, some of you guys are not going to be as lucky as the individual that was in our Discord server that closed on time, and many of you guys that went into long trades now have liquidation prices sitting at 111.9, which is something that we confirm from the data. There is a major bulwark of liquidations down here between 111.7 and 112. And guys, don't get me wrong, it makes sense. It's a great trade setup. You're hoping that Bitcoin bounces off of the previous all-time high, follows through on this exact pattern that we were just talking about, right? This exact pattern right here. You're betting that this leg higher is going to happen because we hold the previous high. But the issue is that's kind of what everybody's expecting. Everybody is expecting that we hold 112. And it just doesn't look like that right now. We could, but I need you to understand that if you're in a long trade right now, you entered into it at 112, you are in a great amount of danger to have a liquidation occur, or at least get stopped out when you drop below 112 if that were to occur. Here's a couple of reasons why a break down to and potentially below 112 is now much more likely than it was. First and foremost, Bitcoin traded sideways here around the visible range volume profile point of control at 118. $118,000 right now feels like a pipe dream. It would feel very bullish if Bitcoin were able to get back up to that level. I certainly hope we bounce here, which we'll talk about in a minute. If we do, that'd be some bullish RSI divergence being built. It'd be great, okay? It'd be absolutely phenomenal. We'll talk about that. But if Bitcoin does not have that breakout, then that means we are confidently below the visible range volume profile level of support, which is basically the ceiling for Bitcoin, at least for a few weeks. I'm not saying we're going into a bear market, but we might drop down into the lower 100s. On top of that, Bitcoin had this downtrending level of support that Bitcoin broke beneath last night. We were hoping that this was just a fluke in the same way this breakout to 123 was just a fluke, and otherwise this downtrend was maintaining and Bitcoin would hold it as support. But in just the last few hours, you can see here that Bitcoin has actually broken south of this downtrending level of support. Now, the good news is there is an uptrending level of support that Bitcoin has been respecting for the better part of the last year and a half, or sorry, the better part of this year. And that is an uptrend that was started down here at $75,000. We found it as support right here at $98,000. And from that bounce, we went on a rally up to 123. The issue that I'm running into now is that the last time we bounced on this trend line, Bitcoin immediately rallied from $98,000, $10,000, 10% in 3 days. At this point in time, however, Bitcoin bounced off of this uptrend, which is beautiful. We bounced off of the convergence of that uptrend in 112. You don't get stronger support than what we saw yesterday. Entering into a long trade at 112 on the 2nd, which was Saturday, made a lot of sense. And I hope you took your profits because that was a great trade entry. The issue is now, bouncing off of those two very strong levels of support, Bitcoin only rallied $3,700 or 3.38%. A far cry from the very powerful bounce that we saw Bitcoin institute here. This indicates that Bitcoin is not done with its corrective movement off of 123 and is smelling a bigger corrective movement. That is why if you are one of these leverage traders that has a lick price down here between 111.7 and 111.9, the whales are hunting your liquidation and you need to be very careful. You either need to deleverage yourself and take a massive amount of margin and protect the trade by pushing your liquidation price down towards 100, or better yet, because we want to preserve capital, it might be a good idea to close out the trade even if you're in a loss when you had a major unrealized gain yesterday. Now you're at a bigger unrealized, maybe you're at about a break even, or maybe you're even at a slightly unrealized loss. It might be a good idea to risk off in this market because Bitcoin is showing signs of weakness. Even down here on the 15-minute chart, for example, we had this very lovely uptrending level of support that was underpinning Bitcoin that capitulated. Bitcoin only managed to get $3,500 away from a very powerful level of support before capitulating beneath what amounts to a relatively conservative uptrend. Like this uptrend that it was building on the 15-minute chart points at a return to all-time high in middle of next August. It's not an uptrend that was impossible to maintain. It made a lot of sense. In fact, it was a more shallow uptrend than the downtrend that led us down here, which looked like this. So it was a fine uptrend. Bitcoin didn't hold it. In short, a drop back down to 112 at this point in time is highly probable. I'm sorry, you couldn't see the chart there. A drop back down to 112 at this point in time is highly probable because we could have maintained this uptrend, but instead we didn't. Instead, we maintained this very steep downtrend, but we were not able to maintain this very shallow uptrend. So this means that a drop back down to 112 is highly likely, and a drop below 112 is also highly likely. If this occurs and you have a liquidation price down there, you are almost certainly going to get liquidated. So if you're a trader, I want you to sit in cash and look for entries, which have not yet appeared. If you want to do some little tiny short-term, shorter long, then you can do that. But in general, if you're looking to open a long at the exact bottom of this market, there is a great reason to believe that 112 is not the bottom of the market, and you need to be very careful about betting on it being, because you could get liquidated. Now, zoom out a little bit. Where is Bitcoin going then over the next month? In my opinion, I believe that Bitcoin is going to see a major bounce. I'm just not yet convinced that it's going to happen here. A drop back down to 100 seems extreme, although it would be absolutely beautiful. And the people that are screaming about that being the end of the bull market have absolutely no idea what they're talking about. Bitcoin has rallied $50,000 in 100 days. Bitcoin is well due and well acclimated for a major corrective movement, especially again considering that these macro forces want to see Bitcoin grow slower so you don't see a bear market. They're trying to prevent the blow off top so that you don't see the bear market because they don't want to lose all the revenue from their ETFs. It's that simple. Now, another reason why Bitcoin might drop lower here is because we are actually rejecting off of the 20 daily exponential moving average, and the 20 exponential moving average on the 3-daily chart sits right here at 112. If Bitcoin breaks $112,000, it is safe to believe that Bitcoin will almost certainly drop a considerable amount, probably down towards about 105 to 108. That would be our first price target. In fact, if we were to draw a Fibonacci right here, you can see that the 0.618 Fibonacci retracement sits perfectly on top of this visible range volume profile peak at $107,000. If Bitcoin then does break below $112,000, I am predicting that best case scenario, Bitcoin drops down to 110 and bounces. Worst case scenario, Bitcoin drops down to $100,000 and bounces. Base case scenario, Bitcoin drops back down to the Fibonacci golden pocket at $107,000 and bounces. And I believe that the months of September and October will be extremely bullish for Bitcoin. That being said, it is possible that Bitcoin needs to have a healthy correction first. And don't be scared of that. In conclusion, if we do see that kind of drop, that means that Bitcoin has forestalled or perhaps even foregone the blow off top up to $180,000 by the end of this year, like many people were calling for, which would be extremely healthy because it almost certainly guarantees that we are now transitioning into a super cycle rather than continuing the 4-year halving cycle. Make no mistake, the 4-year halving cycle has not been disproven yet, but the 4-year halving cycle, it does not work unless you incorporate a blow-off top massive price explosion like what we saw in 2021 and what we saw in 2017. If you don't see banana zone like this, then you don't see bear market like this, because 80% of what the bear market is just back testing and retracing from the banana zone market that we saw here. Bitcoin dropped back down to $3,000, but just a few months before we went into the parabolic uptrend that was the end of 2017, $3,000 was the all-time high. The bear market, for the most part, is just retracing and destroying the parabolic uptrend that you see at the end of the bull market. So when we look at Bitcoin not going parabolic and growing in a linear fashion rather than a logarithmic fashion, you still see 20 to 40, maybe even 60% continual average growth rates for the rest of the decade, but you don't necessarily see a massive bear market, which allows for us to see more mass adoption coming into Bitcoin from the normies. They get scared and get liquidated and sell during bear markets. It means that the market is maturing, and it is something to welcome. It is not something to despise. So from this point in time, I want you to look for something. I want you to look to see whether or not this uptrend holds. If this uptrend does not hold, and you see Bitcoin drop back down towards 112, there's a much higher probability that Bitcoin will break 112 than it did the first time. There's a much higher probability that these liquidations down here at 111.7 to 111.9 will get liquidated, which could trigger, if we look at our data here, approximately $100 million of long liquidations, which would lead to a very fast max pain event, which would lead Bitcoin to dropping down to $110,000, potentially within minutes. This is the kind of movement that could happen today, so please be on the lookout for it. And once again, and finally, if you're in a long trade right now, please be very, very careful. It might not be a bad idea to take profits. If you have profits, de-risk yourselves and look for another entry. I have stated my piece. I hope you've enjoyed today's video. If you did, I want to give you something for free. Do you remember yesterday when I was in the Discord server and I coached someone through closing out a trade in $8,000 of profit? Last night at about midnight, the market was about right here. I encouraged them to take profits on the trade that they entered down here. One, because they were about to get auto deleveraged, but two, because this uptrending level of support had broken. They closed out that trade with 115%, $8,000 of profit. Almost immediately following that decision to close out that trade, Bitcoin dropped $2,000 right back down to their break-even price, which was 112.8. Had we not had that conversation and had they held that trade, they would be at break-even right now, risking liquidation. But instead, they made $8,000 in 36 hours. And hopefully, our Discord server was able to help them. It was a beautiful trade. It was a sight to behold. It was absolutely incredible. And this individual displayed excellent risk management, excellent profit-taking, and excellent discipline, and made a lot of money because of the things that they have learned in the first cohort and because of the characteristics that they have brought with them into the cryptocurrency markets. And I want to encourage you to join them. I want to have more conversations like that. I want to help more of you guys. I want you guys to teach me things. And the best way you can do that is by joining the first cohort. But guess what? If you want to join the first cohort, here's how you do it. I'm going to give it to you for free. Yeah, I really am. Here's how you do that. All you got to do is sign up for 2Bit. If you sign up for 2bit, our exchange partner, and you deposit $100, I will give you access to the first cohort Discord server for free for a year. I will show you all of my trades. I will show you all of my entries. And if you have any questions about your trades, I would be more than happy to answer them, as many of them as I possibly can. If you deposit $100 on 2bit, you're not only going to get a coupon code that'll get you access to our first cohort trading group Discord server for free for a year, you'll also get $30 over on 2bit for free. $100 just became $130. But wait, there's more. When you register, you will get $50 as a welcome bonus. So you just turned $100 into $180. But when you do your first trade with over $1,000 on perp futures, you will double this bonus into $100, which means you just turned $100 into $230 and a year free of access to the first cohort Discord server. So here's what I want you to do. I want you to go to the link in the description box down below. Step 1, go to the website that is this page. Come right here, type in your email address and your password. Make sure our referral code is here, BTDDTE. That's our referral code. When you make your account, deposit $100. After that, take a screenshot. And take a screenshot also of your user identification number. It's called a UID. It'll be in your settings. Send both of those screenshots to malachipats@cryptojeb.com. That email address is in the link in the description box down below. He is our community manager and sales manager over on Discord server. On the Discord server, he will respond with a coupon code for you to get into the Discord server for free for a year. You can then click the link down below to go to Teachable, apply that coupon, and get into the first cohort trading group for free for a year. That is a $419 value on top of $130 real dollars that you get from signing up for 2bit. It doesn't get any better than that. So sign up for 2bit, get trading today, join our trading group, and let's look for some excellent entries together. I hope you enjoyed today's video. If you did, make sure to hit that like button, subscribe to the channel, and I look forward to seeing you in the next piece of content. Peace.